So I've had this comment more than once on my videos talking about XRP and its role, hence our role, in speeding up the emergence of CBDCs, which is effectively perceived mostly as the government's ability to control absolutely everything that we do with our money. But it turns out that privacy is something that not only we are worried about, and in fact that the people that are designing these CBDCs are also worried about, because believe it or not, these people are human beings like you and me, and they're just as wary of government total control as we are. So it turns out that a lot of academic research has actually been going into the ethics of CBDCs. In Europe, for instance, they've actually gone and done some research amongst the masses where they've found that privacy is actually the number one thing that people care about, more so than convenience, security, profit, or anything else. It's quite encouraging actually that in this day and age that people still value privacy. Judging by what goes on social media, I found that actually quite incredible. I would expect that privacy wouldn't be a big thing. Apparently, it's still a massive issue. So that's relatively encouraging. The Digital Euro Association Public Digital Euro Working Group, that's a bit of a mouthful, published this report in January 2023, which is called Privacy and the Central Bank Digital Currencies. So privacy as related to CBDCs. And it's quite an interesting read. It's quite academic, but I've read the whole thing. It's not actually that long. And I have annotated the points that I think are interesting, well, to myself, and that you guys might find quite interesting from cryptocurrency holders and XRP holders' point of view. It's quite enlightening, actually. And I found a couple of shocking things that I didn't know before, but I also found some pleasant surprises. So stay tuned. So here we have all the contributors. You can see their names here. The chairperson, list of abbreviations, etc. I can actually leave a link to this document in the description if you're willing to have a copy of this. You could also just Google this and you can probably just get to the website. I had to provide my email address in order to receive this. Here you have the table of contents, reasons for privacy and degrees of privacy in CBDCs, CBDC privacy stakeholders, technologies, regulations, conclusions, recommendations. And you can see that I've annotated some sentences in yellow. Those sentences are the ones that I found quite poignant and interesting. You can also see here that I've written Data Protection Act and GDPR because some of these sentences or the information I found on here immediately made me think of Data Protection Act and GDPR, because here in Europe, we actually have a lot of laws that protect us from some of these potential overreach of government or breaches of privacy. So we have the Data Protection Act, which is a UK specific act, but also have equivalents in Europe. And since the UK has left Europe or the EU, we're not necessarily bound by the regulations, but some of them we have kept, like the GDPR one. You still see those messages when you have websites that are visible from the UK that have to tell us what it is they're using our information for, how is it they're using our information, their privacy policy, etc. Privacy is regarded as a crucial factor in the investigation and development of CBDCs and is therefore thoroughly researched by monetary authorities, academia, and the private sector. Academic research indicates that CBDC transactions may involve processing significant amounts of identity and transaction-related information. So we're moving into this sort of global currency sort of stuff where governments and organizations and third parties will have visibility potentially to a lot of our personal details. That's very scary and unnerving for a lot of people. Raising privacy concerns for future users. While there exists countless definitions for privacy, such as the right to be left alone, in this document, the definition of Nissenbaum, I think that's the pronunciation, the appropriate flow of information will be followed. So again, different definitions of privacy, that's the one that they're picking. There is preliminary evidence that suggests that the level of privacy associated with CBDC use will be a key determinant of CBDC adoption and usage. In 2021, the European Central Bank issued a report on the public consultation on a digital euro that included 8,221 respondents. So 8,221 respondents were involved in this research. The report revealed that privacy was the most important feature required by individuals, although results varied depending on the country analyzed. Nonetheless, on average, privacy was ranked higher than all other features such as security or usability, as I summarized in the beginning. So it goes into more detail about the research that's been done by third parties, etc., and academics, and privacy comes right on top every single time. Reasons for privacy and degrees of privacy in CBDCs. It is imperative to understand why privacy is such a key aspect in CBDC design, as well as to assess privacy in existing payment methods, such that we may compare this to proposed CBDC models. Okay, privacy is a key consideration for the implementation of CBDCs, as it is with any government public project involving personal and personalized information regarding citizens. The degree of privacy, reasons for it, and prioritization can vary significantly between jurisdictions. It is an essential part of individual autonomy, and many human rights rely on privacy as a core pillar to establish barriers and safeguards from unwarranted interference in people's lives. Privacy provides citizens protection from control and manipulation of power, human dignity, safety, and self-determination. That's a fantastic couple of sentences. So privacy is a pillar of human rights. So it's more than just government regulations, regional government regulations. It's a fundamental human rights. And the UN actually recognizes this, as we shall see later on in the video. The increasing digitization of the economy has made it easier than ever before to acquire data about individuals without their knowledge and infringing on their rights to privacy. Protection of personal information is listed in the Article 12 of the United Nations Universal Declaration of Human Rights, and is reaffirmed as a human right in many other conventions and charters, such as the International Covenant on Civil and Political Rights and European Convention on Human Rights. So you can see that a lot of global sort of bodies that have these charters and conventions mention privacy as a fundamental human right. So we have a right to privacy. CBDC design and implementation must not increase the exposure or vulnerability of citizen data in favor of speed or efficiency. Now, that's one thing that we've seen with organizations such as Facebook, now called Meta, where data privacy was breached because some technology was released to make things more convenient, to make things run faster, and because deep in the terms and conditions, waivers have been included and clauses have been included to keep Meta from being suable, and people had basically written off their natural data privacy to a company that, basically had no responsibility, and things like that were breaking, and they're trying to basically avoid or at least legislate against stuff like this on the design level. Doing so would risk violating international laws and conventions and jeopardize the successful adoption of CBDCs. The loss of citizen trust in a CBDC would result in the non-use of the instrument and non-achievement of the policy goals for its implementation. So now it talks about the trust in government, which is extremely low at the moment. In fact, I think it's historically low, basically exacerbated by current events, shall I say. So having a CBDC that doesn't secure privacy or breaches privacy, that's going to completely destroy whatever trust that people have left in their governments. So the privacy in existing payment methods versus CBDCs. This is quite interesting. Degrees of privacy vary across existing payment methods. Typically, every payment method, with the exception of cash, requires a form of onboarding to utilize. This provides all actors in the payment system with a minimum level of participation and creates a governance and a compliance framework. The level of data required and processed varies by transaction and is usually dependent on the transaction type and value. This data might include just account identifiers, but could also include other personal identifiable information, PII, to support compliance requirements. So there's this table here, which nicely summarizes the levels of privacy by type of payment and type of transaction. So various payment methods in use today, outlining the minimum data required to utilize each method and compare them with cryptocurrencies and CBDCs. You would notice that cryptocurrencies and CBDCs here are separated. That's because, as you shall see later, Not all CBDCs are crypto based, and not all of them are actually even blockchain based. Some are, probably the majority would be, but at the moment, on the design level, not all of them are actually going to be blockchain based, which is quite interesting to find out actually. We have cash, bank transfers, credit or debit card, e-money, cryptocurrencies, and CBDCs in the last column. So onboarding, cash, obviously none. Cash is king, the number one anonymous way to spend money, unless you have marked notes. So no onboarding requirement. Bank transfer, account opening, and KYC, of course, because you have to have a bank account in the first place. Credit cards, exactly the same thing. You need an account in order to get a debit card or credit card, so that's on the same level as bank transfer. E-money, account opening, and KYC, exactly the same thing, because e-money really is digital banking rather. Cryptocurrency, now this is not totally accurate because it says pseudo anonymous KYC. So basically, I think this assumes that you have to have an exchange account, as you shall see later. Of course, you can have your own cold wallet, you can have a hot wallet on your phone, and just create the wallet out of thin air, basically. Of course, the bit where you might fall into a little bit of trouble and might have to do some KYC is when you on-ramp cash, right? Fiat on-ramps, right? But of course, there's several ways of achieving cryptocurrencies without having to have a fiat on-ramp, which I'm going to talk about later. But I think this table assumes that you're signing up to use Coinbase or Binance or KuCoin or something like that, all of which, of course, now have to do KYC. And of course, CBDCs, account opening and KYC, the same as any other bank. Point of access. So this includes the fiat on-ramp for cryptocurrencies, like I said before. Again, ATMs, other holders of cash, again, nearly 100% anonymous. Of course, they can have cameras at the ATMs. You can wear a mask if you want, but you can always just get cash from other people on the streets. Bank, website, mobile app. They know who you are because you need to sign up for an account. They already know who you are anyway. So your account is already fully KYC'd. Same for credit card, ATMs, point of sale, physical sale online, physical and online, e-money, website. Again, e-money is basically the same as banking, except it's digital. Cryptocurrencies, here it says exchanges, wallets. Now again, I put a little dot there because yes, exchange wallets, but you can also have your own self-custodied wallets. So that is not included in this study because, of course, how do you include it? CBDCs, website, mobile app. Again, so far, no differences between e-money or CBDCs. Counterparty identification, again, cash is totally anonymous. Bank transfers, everything possible, all of the information. Debit card, card number, e-money, proxy identifier, e.g. email address, of course, because again, it's digital. Crypto, wallet address. Okay, that's the same for both hot wallets, cold wallets, exchange wallet, etc. That's exactly the same. CBDCs, various levels from complete traceability to full anonymity. Now we see the first departure from e-money, because CBDCs, you will find out later, is actually being designed to be tweakable, so they can dial the level of access or the level of privacy from cash level, which is fully anonymous, to fully transparent. We shall see that a bit later in the video as well. Transaction information, amount spent. Now, if you walk into a shop and bought something with cash, it would be recorded how much was spent, okay, by the merchant. But of course, what is not recorded is who spent the money. This is completely anonymous, even though the transaction itself exists on some kind of database. There's no information about who made the transaction. Again, banks, absolutely everything possible. Debit card, even more information. E-money, same. Cryptocurrencies, originating address, destination address, amount transferred, date and time. So open ledgers, these can actually be reviewed by anybody that has access to the ledger. But of course, there is no information about who is doing the transaction if this was done wallet to wallet, if it's a self-custodied wallet, right? So if I send an amount from my MetaMask to my friend's MetaMask, there is no information about who owns the MetaMask wallets. They just know that an amount was sent from here to here on this day. That's it. CBDCs, that depends on the amount tier. Another thing with CBDCs is, apart from being tweakable, on the privacy end based on jurisdiction, country, organization, etc., is also tweakable by amount spent. So there are proposals, which we shall see again later in the video, that if the amount spent doesn't reach a certain threshold, that could be completely anonymous. But then when it breaches a certain threshold, say £100 or $100 or $1,000, then it falls into traceability. So as long as you're spending $5, $10, $20, $30 below the threshold, they let you spend it as if you were spending cash with no traceability. But the minute it rings the $1,000, $2,000, whatever the threshold is in your jurisdiction, then it becomes eligible for traceability. Transaction monitoring, again, cash, absolutely none. As we can see, cash is king. If you're an anonymity fan, cash is king, and it will remain king even after CBDCs. Transactions, screening, by account, servicing, institutions, payment scheme. Again, a bank account, everyone knows exactly what you're up to. Same with debit cards, same with e-wallets. On-chain analyses can be done for cryptocurrencies. But again, if you are doing cold wallets to cold wallets, or you're doing MetaMask to MetaMask or something like that, the analysis can be done. Again, they can tell that an amount moved from X to Y, Y to X. But as long as there's no KFC, as long as there's no KYC on the original wallet or either wallets, then there's no way of them telling who did the transactions, at least not to my knowledge. And of course, CBDCs varies again, more information than existing payments to cash-like. So again, the bandwidth of CBDCs is to go from cash-like transactions with full anonymity to more information than ever before. So more information even than transactions in by debit card or e-money. Now I wanted to say something quickly about transactions that we have now by debit card or e-money. So when you go to buy something, say in Tesco's, right, and you pay by cash, there is no record on their database about who spent the money, right? They received the cash. If you use your credit card, what they have is information about what was bought, when it was bought, how it was paid for, right? They don't have your information, but the bank that issued you the card has all of the other information, like who you are, where you were when you spent the money, because they have the registration of the point of payment that you used at Tesco, right? So the bank can tell who spent the money, where the money was spent, and when, right? But they can't tell what you bought. The merchant, which is Tesco, can tell what you bought, when you bought it, how much you spent, but they don't know who you are. Now, that information can be brought together if they collaborate with each other. But at the moment, of course, depending on your jurisdiction, that information is being protected by the Data Protection Act. So Tesco can't share your information with, say, Santander, if that's your bank. However, if you sign up for a loyalty program, say to get discounts from Tesco, now they marry that information. On that Tesco app that you've downloaded onto your phone, not only does Tesco know what you purchased, when you purchased it, how you purchased it, with what you paid, they also now know who you are and the other information. Now they have the complete information, and based on whatever their terms or conditions are, or whatever you sign to get the discount. So basically you've exchanged your private information and done a waiver for the Data Protection Act in order to get your discount. Now, Tesco can and often do share that information with your bank, with advertisers, etc. And that's how that works. With CBDCs, on the other hand, they're going to be able to tell absolutely everything. They know where you are, when you were, what you bought, with whom. All that information can be accessed, but then there's a DAO to control how much of that information can be accessed by the government or can be recorded and reported and used. All right, privacy in CBDCs. Potential models for privacy are dependent on the method of CBDC access and CBDC type. Some central banks have indicated that onboarding users is likely to be facilitated by trusted intermediaries, e.g., banks, regulated institutions, telecommunications providers, etc. So these people are already experts at gaining your information. So even though this seems scary, there's nothing new about your bank, your telecommunications provider, and other such intermediaries knowing all your information. I mean, you just try to sign up for a mobile phone contract and they want to know your blood group and DNA, a haplogroup or something. That's how much deal of information these people already hold in databases about you already. So these guys are expert at extracting such information. So some central banks actually employ that expertise in gaining your personal information. They already have established practices and proficiencies in this regard. This in itself would likely require users to provide information to allow the intermediary to KYC them in accordance with any rules defined by the state. Once onboarded, consideration would need to be made as the level of information that is required to be shared. There is certainly potential to offer CBDC users a greater variety of privacy levels than exist in current digital payment methods. There is also the possibility that transaction data beyond the value movement is handled off ledger through a different protocol. Now you can see I've put a massive OMG there because I do not like that at all. So what that is saying is that there's a possibility that they might have a side chain or side protocol, a side database somewhere where they're doing something completely different to what's happening on the supposedly secure and private system that is CBDCs. Now, what level of protection, what level of privacy, what level of encryption, etc., covers all of that side stuff that we might not know about. Who knows? I'm not a big fan of side things happening in the corner that is not fully disclosed. Now, this table summarizes the spectrum of different privacy approaches analyzed in this paper. If all transactions and other consumer data were visible to merchants and intermediaries, one would be under the lowest possible level of privacy. So that's the lowest possible level of privacy as shown by this first row here. On the contrary, if no transaction or other data is visible to intermediaries and merchants, one would achieve the maximum degree of privacy. Now, as you can see, it basically just tells you how they can dial the privacy level of CBDCs by design to match different jurisdiction requirements. So let's say you were living in a country like Germany or the UK that have really, really high privacy requirements. One might be in this sort of medium high to the highest sort of privacy setting. Or if you're a person of high interest, perhaps a diplomat or member of the government, you might automatically have the highest setting. Whereas say you were in maybe China or South Korea, I don't know what the level of privacy requirements are in those countries, you might maybe end up in one of these lower end settings. At the moment, these are just basically approaches. They're sort of arbitrary levels that have been defined by the design team and not necessarily rigid, but it just gives you an idea of, what the level of privacy you can expect. So when it comes to privacy and CBDCs, who are the stakeholders? There is a need to ensure a balance between preserving user privacy and compliance with various regulations and policies. In order to strike this balance, several stakeholders and participants need to be engaged early in the CBDC journey to get relevant buy-in and allow privacy and trust in the use of CBDCs. These stakeholders include government authorities through the Office of Ministry of Finance and issuing monetary authorities, mainly central banks or reserve banks, financial conduct authorities, financial intelligence centers, commercial banks, payment systems providers, competition and consumer protection agencies, centralized know your customer authorities, KYC authorities basically, including mobile network operator databases, banking and payments associations, national ID versus functional ID authorities, merchants, payers, and most importantly, us, the end users. Intermediaries can be defined as a party to the relationship between a payee and a payer. These could include payment service providers, e-money institutions, and commercial banks, amongst others. So basically, it's a whole dance between privacy and compliance with the law, and there are all these different parties who are interested, and to each person, the requirements are different. Us, the end user, we desire maximum privacy. Let the regulations be handled by everybody else, whereas the government and the banks, they probably want maximum transparency so that they can comply with the law and regulations, but then they have to balance it with our privacy as stipulated by regulations and laws. So it's a whole kind of dance, and basically the idea is to get everybody on the table to talk about this on the design phase to try and strike a worthy balance. All parties involved in CBDC payments must both receive and provide data in order to fulfill their function and participate in the CBDC ecosystem. This table summarizes minimum data requirements supplied by the primary stakeholders, end users, central banks, commercial banks, etc., as listed above. As you can see, minimum data required. End users, we get absolutely none, so they don't have to provide us with anything, but we must provide them with KYC, phone number, former ID, registration, license, passport, etc. As you can see, we, the end users, get the raw end of the stick when it comes to privacy data that has to be provided to us. However, we must also provide the most information. Central banks, again, have to provide no information, but they get maximum everything. Okay, commercial banks get full KYC data. Merchants don't get anything, but they do have to provide their trading license. Payment networks, full KYC data. Mobile operators, somehow, I don't know how mobile operators are always there for maximum gain, but they get full KYC data. Now, this is my favorite bit, technologies. This section examines the trade-off between privacy and security from a technological perspective and examines the various privacy approaches that central banks may adopt. Choosing to prioritize one aspect of privacy can mean sacrificing potential gains in security, a scenario commonly referred to as a trade-off. With the advancement of cryptography, new systematic and mathematical methods to achieve privacy, confidentiality, and anonymity in a wide range of financial systems and applications are being developed. Now, quickly, in the past, security and privacy and convenience used to be kind of diametrically opposed. So the more you achieve one, the less you achieve the other. And this kind of trade-off dance. But in this era with cryptocurrencies and cryptographic technologies and the blockchain, it is increasingly possible to eat your cake and have it, which is pretty much what they're saying here. To enhance the robustness of privacy in CBDC implementations, existing technologies require further development to achieve a scalable CBDC system that combines privacy and security. This is one of the main causes of tension between the cryptocurrency community, that's us, and the traditional financial world, that's the banks. Exactly. So this dance between the requirement for our private data and the convenience of technology has been a problem. Fully anonymous, pseudonymous systems cannot satisfy the regulatory requirements of the financial system, which is why we all moan and groan when Binance and Coinbase and all those people are demanded by law to seek KYC from us, whereas we cryptocurrency people would rather stay anonymous and do our cryptocurrency thing in the background. So that's a never-ending dance that's going to carry on into the future, I suppose. However, these two goals, KYC and privacy, are achievable at the same time with cryptocurrencies. From a technological standpoint, the optimal balance is designing the privacy aspect of digital cash is to have traceability of the sender without disclosing the user's private information. This implies that transactions should primarily be encrypted and anonymous. Some countries may prioritize anonymity for transactions below a certain value, ensuring that the associated data is completely irretrievable. On the other hand, other countries may choose to retain transaction data for all transactions, including low-value transactions, making them retrievable only if legally required. This is what I think is going to be more popular because the governments are going to lobby for this. Because for us, we would like the first option where anything below the threshold, so all our daily grocery shopping, getting petrol for our car, all those spending, little sort of daily spendings that aren't large enough are completely anonymous, irretrievable data, even if the government wanted it. Just like spending cash, we would love that. But the government, of course, would want to know everything. Say they want to audit you, your spending, to see if you've paid your taxes. They want information on what you spend money on. They would lobby for being able to legally retrieve that information. This is what's going to happen. Self-sovereign identity, SSID, a set of technologies that shift control of digital identity from third-party providers to individuals, may offer a solution in the near future. This is why I've highlighted this in green, because I absolutely love this concept of self-sovereignty. In blockchain-based CBDCs, note at present, not all CBDC implementations are blockchain-based. I said that earlier on, which is why I've highlighted this in red. Terrible. I think they should all be blockchain-based, because if they're not blockchain-based, they're not as secure, of course. No personal information can be retrieved from the blockchain without the use of sidechain data. This kind of network separation could be a good balance towards achieving an optimal level of privacy while preventing illegal activity. So here it talks about the different types of privacy approaches. We have software solutions, hardware solutions, of course, hybrids of the two. And these are the existing academic level sort of concepts of software privacy achievement. I've just skimmed over that, not too important, a bit too geeky. But this bit here is important. Privacy in post-quantum world. I've highlighted this because I find this absolutely fascinating. It's a little bit futuristic at the moment, but it's something that they're thinking about. And it's something that actually has been worrying a lot of crypto enthusiasts. The infrastructure that secures data and provides users with the required privacy can only be as strong as the weakest link. Developments in quantum information systems are emerging, raising the questions related to how quantum computational power can be utilized to overwhelm or break security measures that protect user funds and data. A vulnerability of CBDC can be identified in its structure. Some live CBDC implementations are DLT based, as the vast majority of existing blockchains rely on elliptic curve cryptography and have their public keys known. A powerful enough quantum computer will be able to derive the private key of an account with at least one outgoing transaction. Although there is no quantum computer capable of breaking blockchains today, to carry out storage and transit attacks, bad actors can employ the store now, decrypt later scheme, where they would obtain data now but decrypt it at a later date with quantum capabilities. It's worth considering how privacy achieved through encryption may be affected in a post-quantum world. Transitioning to quantum secure cryptography may be necessary, as leading economies have planned to migrate to quantum-resistant cryptography, with National Institute of Standards and Technologies (NIST) spearheading the standardization mandate. It may be prudent to contemplate the future potential quantum threat in current CBDC designed considerations. That's absolutely fascinating for me because it's quite futuristic, but it's something that they're taking really, really seriously. Now, quantum computing is going to be absolutely paradigm shifting when it does happen. It's only a matter of time before someone builds the first one. And it also gives me a little bit of a pause to think. Now, if you think about how technology has developed over the centuries, right? We went from the industrial age, which again itself completely changed the way people did things once someone invented the steam engine. And then we went from that to when someone invented the first transistor, which gave us the ability to build electronics. And then that completely changed the way things were done, because now we had electronic circuits that could do some rudimentary automation that human beings were absolutely necessary to do. And now someone invented computers and then the internet, and that completely changed everything again. And now we have cryptocurrency and blockchain, which again has changed a lot in the way things work. Now, I'm old enough to remember the time when only 125 encryption was allowed outside the United States, because the US government wasn't able to crack 256 encryption. So they didn't allow 256 encryption out of the United States in case it got held on by, terrorists, etc., and they couldn't intercept their communications. After a while, that got released, which kind of made me think that perhaps the US government had figured out somehow to crack the current encryption that we're using now. And if they're able to do that, they're not going to publicize it, right? They're going to keep it secret. All of the crypto stuff that we have now may already be crackable by the powers that be, highly confidential state technology. Now, the fact that we're talking about quantum computing now and people starting to worry about it kind of gives me pause to think that perhaps some deep level, government level stuff, deep state science, deep state technology can already crack cryptocurrencies. Perhaps they've already achieved quantum computing, and when it does get distributed to us, when it gets accessible to the masses, they would have already moved on to something else. So it is extremely prudent for organizations should be thinking about this now. And to me, as someone who's a technology enthusiast, the whole thing is just absolutely fascinating for me. Protection of information privacy is not only desired by users, but also compulsory by law, as privacy is regarded as a fundamental human right and not just a right granted by a state. I mentioned that in the beginning, that privacy is actually our human right. As you can see here, it is mentioned in the human rights statutes of all kinds, the human rights by the United States, Universal Declaration of Human Rights by the United States. It's absolutely there, 1948. Data privacy must be applied to both the regulator and the subject of the applicable law. However, the rights to the protection of privacy and the personal data are not considered to be an absolute right. Now, there we go. But must be considered in accordance with the principle of proportionality in relation to its role in society and in balance with other fundamental rights. So again, there's a balance. We have right to privacy. It's a natural human right, but it's not an absolute right. There are other rights that can supersede it. There are other circumstances that may mean that we lose that right. Thus, it can be restricted proportionally, accordingly, by law to provide protection of certain other economic, social rights. Okay, gives you taxation, etc. That's a great one. No one's special rights, no one's human rights, and no one's privacy right can protect you from taxes. All right, when the government comes to collect the tax, you've got to pay up. Such a proportionate balance scheme shall be outlined by the regulatory body. Regulatory bodies have the difficult task of developing a sound framework within which the implementation, application of CBDC systems may function. In Europe, the EDPB is responsible for ensuring the application of the GDPR, which I mentioned earlier on. I'm happy it's come up. Issued a statement on the importance of privacy by design and by default principles in the creation of CBDCs, and called for the avoidance of systematic tracking through CBDCs. This could be a guide for other jurisdictions thinking about regulations for CBDCs. And this bit that I've highlighted here just goes through that thing that I already talked about how you can have a threshold and have transactions below that threshold be completely anonymous, and a trigger to then track transactions that are above a certain amount. This would make such transactions analogous to payment in cash. So CBDCs are able to achieve cash level payments if they are designed as such. And it gives these 7 recommendations. I've highlighted the last 2, which I think are the most important, but I'll read them really quickly. Include strong encryption and security protocols in CBDC design, considering also those utilized in distributed ledger technology, XRP, to protect the privacy of individuals and their financial information. Obtain early buy-in from key actors in the CBDC ecosystem to ensure they are in agreement and compliant with relevant privacy standards and protocols. Establish clear, transparent, and consistent standards for data protection and privacy in CBDCs. Implement robust auditing and monitoring systems to timelessly detect and prevent any potential breaches of privacy. And now these are the 2 most important ones from my point of view. Develop an uncompromising disciplinary regime for violations of privacy policies, because this is something that is going to happen. We're going to have to define what are the clear punishments for breaches of privacy to deter companies and organizations that are going to be willing to breach this privacy, including governments, by the way. Work closely with stakeholders, that's you and me, and the organizations, and the general public towards factual CBDC education to quell the myths related to CBDC privacy. So like I said in the beginning, this is something that's absolutely inevitable. The best thing that we can do is to educate ourselves on CBDCs and what they're doing and the level of privacy that is involved. It is also important that we become active and participate on the design level so that when CBDCs get implemented, not if, when they get implemented, at least we would have input in basically what it does and how it handles our data. Again, it's a really controversial thing, CBDCs. A lot of people have really, really strong feelings about it. But as you can see, the more information you have, the better you can decide what to do. I will see you in the next video. Take care of yourself. Peace.